So some of the services that you can access on e-filing, your pay-as-you-earn, which we are going to discuss in detail later on, your skills development levy, your UIF. We're also going to discuss UIF in detail, your VAT, your provisional tax, your corporate income tax, your personal income tax, trusts. To change your details, you can do it on e-filing. You don't have to go to the branch. Tax practitioner registration, to search if someone is a VAT vendor, to calculate taxes before you can submit, to register your new tax number. It's something that you can do yourselves on e-filing, and to look at the history of how you have used your e-filing to make not only customs payments, but all different types of payments. You can do this on e-filing. I have had clients who have called me and they say, we are at the bank and we want to pay for this and that. What is it that we must do? What is SARS account number? Now, these are the things that you can do on e-filing. SARS registered representative. As I have discussed with you previously, we are all natural persons, but there are persons that we call legal entities or persons by law. Companies, trusts are examples of this. They are persons, but they are legal persons, meaning they are not natural persons. Now, these are not people who can represent themselves. So what SARS requires is that for every legal person, meaning for every company or for every trust, there must be a natural person representing this legal person. We call this person a registered representative. Now, a registered representative is a person, and commonly this would be the director of a company who is appointed to act with full rights on behalf of another legal entity. It's more like a child who is less than 18 years old needs a guardian who must represent them. Okay, mute yourselves, guys. Mute yourselves. Right, now, if a company has more than one director, then the directors must agree to nominate only one who is going to be acting as the official representative. And this person will be registered with SARS. What you have to note is that there is no e-filing service that can be provided for a legal entity which does not have an updated representative. This has been effective as of April 2021. Now, if we have done work for you before April 2021, you might have noticed that we never asked you, are you a registered representative? Now, if you come after 2021 and you say, Happy, you did my tax clearance or you did my tax returns last year, I need you to help me. Then I say to you, I cannot help you today because we need to register you as a representative first. And this is a process that can take 21 days. Then you will be amazed. But last year you did it for me quicker than that. Tax legislation changes annually because the SARS agency comes with ways of how to always improve and to protect the taxpayers. So due to high increasing levels of fraud, the legal registered representative must be updated to confirm who can act with full rights on behalf of a legal entity, and how one can register as a legal entity. You can do it on e-filing, or you can use the SARS online query systems. Also, when you go on the SARS website, the steps of how to update yourselves as a registered representative on e-filing are placed there. Alternatively, a registered tax practitioner like us, we can help you to register yourself as a representative, but this will come at a fee. And the purpose of this webinar is try to help you not to pay for the things which you yourself can manage to do. What is a SARS tax practitioner? A SARS tax practitioner is anyone who provides advice to any person about the application of Tax Act at a fee, or the person who completes or assists with the completion of a return for another person at a fee. If anyone helps you with SARS work or tax work, and this person is charging you a fee, this person must be registered as a practitioner. Now, I have realized a lot of people will create e-filing profiles. Then they will go to a person who is not registered as a practitioner. Then they give this person the login details and they say, can you do these returns for me? And one of the reasons they may be doing that is because they believe that when they come to a tax practitioner, the service might be expensive, right? But in cases where something goes wrong on your filing, if your filing was done by a tax practitioner, then the liability is going to be placed on that tax practitioner and not on you directly. But if you have appointed someone who is not a practitioner and they're using your own profile, then should something go wrong, then you are liable for that, because SARS is under the assumption that you are the one who did that. So you cannot say to them, I have appointed Happy, he is my friend who I know and has this tax experience or tax qualification, right? So it is very important that when you do not know, you use the services of a tax practitioner. And this is the reason why you do not just become a tax practitioner. There are certain requirements, and they are as follows. Number one, you need to belong under the jurisdiction of a recognized controlling body. At the beginning of this presentation, I explained, for example, that I am a member of SAID, I am a member of SAIBA. Now, before I can be recognized as a practitioner at SARS, they will need to first confirm with these registered controlling bodies if I am a member in good standing. A practitioner must have minimum qualification set by the recognized controlling body, meaning that I do not go to SAID and register, but they will say, you need to have a minimum amount of qualifications and experience for us to be recognizing you as one of our own. No criminal convictions, and also must participate in continuous professional development programs which are set by a controlling body. So we as tax practitioners, we have a certain amount of hours that we must meet annually. And these are for continuous professional development. I graduated a few years ago in the University of Johannesburg, but to be able to keep abreast with the times and to provide most accurate and updated information on taxes, it is because of this continuous professional development that our controlling bodies enforce on us to do. Now, if you work with someone who is not a practitioner, chances are this person may not be continuously developing themselves. So the information that they help you with might be outdated because there is no one who is forcing them to always update themselves. Registration as a tax practitioner is a dual process between the recognizing controlling body and the tax practitioner. Sorry. Okay. We have different types of taxes. I have had many of my clients, we submit, for example, provisional tax, then in 6 months, they call, SARS calls them and they say, you are not compliant. And they say, Andy, but I remember in March, I paid you and your guys to do the work and you did the work, but it's now October and SARS is saying that my status is non-compliant. Now, there's a list of more than 20 tax types, which I have put on this presentation. But as discussed, we are only going to discuss the first 5, which is corporate income tax, payee, UIF, provisional tax, and VAT. We're going to look at 5 important points. What is it? Meaning, what is this tax type? Who is it for? Meaning you need to understand me as a company, which tax type is applicable for my company? What steps must I take? Now, if a tax type is applicable to you, what steps do you need to take to make sure that you are compliant? When should it be paid? We go into, see something, raise the hand. Okay, guys, if you have any comments, you put them on the comment section, and then my team is going to address them at the end of these presentations. Thank you. When should it be paid and how should it be paid? We're going to start with corporate income tax. What is it? So corporate income tax, also called CIT, is a tax that SARS imposes on companies resident in the Republic of South Africa. By resident, we mean this company was incorporated under the laws of the Republic of South Africa. This company is also effectively managed in the Republic, and it derives its income from within or outside the Republic. So if you register a company, but that company is deriving its income in Botswana, then you are liable for income tax in South Africa. I have one of my clients who registered a company in South Africa, but they are doing the work in Tanzania, in England. So they are deriving income from outside the Republic. But because it is effectively managed here and it was incorporated here, then it is liable for tax in the Republic. But there are arrangements within countries on how to avoid double taxations, because in Tanzania, they might tax the income that side, and here we will want to tax that income. So there are agreements between these countries on how to avoid double taxation, but that is beyond the scope of what we are going to be discussing now. Non-resident companies which operate through a branch or which have a permanent establishment within the Republic are also subject to all the income that is sourced from within the public. Meaning, if you are a Tanzanian citizen, but you have established a company in Tanzania, but you have a branch here, then all the income that is derived from this branch in South Africa will be liable for income tax in South Africa. And who is it for? Corporate income tax is applicable, but not limited to listed companies, unlisted companies, meaning it was listed, then it unlisted, and private companies. Private companies is what most of you are owning. So all private companies must register for corporate income tax and are liable to file and pay income tax. Small business corporations and dormant companies. Dormant, it means you have registered a company, but it is not yet trading. So if a company is dormant, it is still liable for income tax. Now, what steps must you take? For all the CIPC registered companies, you are not required to perform a separate tax registration. This is done automatically the moment when you register your company with through the direct interface that SARS has with CIPC. After you register for income tax, you are liable to end, take note, the tax periods. So each tax type has a different tax period. For corporate income tax, you are supposed to submit annual tax returns, meaning a company must submit its ITR 14 within 12 months of its financial year end. And a company's financial year end will be shown on your CIPC registration certificate form, which we have attached on this presentation. So what do we mean when we say you submit within 12 months of its financial year end? We mean that a company with a year end of 28 February has from 1 March until 28 February of the following year to file its current tax, its current income tax return. I have put an illustration there for you. All right. So your 2022 financial year end, it means this is a year that started in 1 March 2021 and it ended in 28 February 2022. That is the financial year end. And you know your financial year end by looking at it on your CIPC registration document. Now, for everyone who falls in this period, it means you have from 1 March 2022 until 28 February 2023 to file your income tax return. Now, all registered companies must submit a company tax return on an annual basis, whether you are making a profit or you are making a loss or you are dormant. Because some of the people will say, no, but I was not trading, so I don't need to submit a tax return. Now, even if you were dormant, you still need to submit. And the reason for this is so that you can show SARS that you are still operating as a going concern. A going concern, it means that you are believing that you are still going to conduct business in the near future. So even if you are dormant, but you are a going concern, you need to submit your income tax return. When should it be paid and how should it be paid? We are going to touch on the next slide when we discuss provisional tax return. Now, what is a provisional tax return? Provisional tax return is not a separate tax from income tax, but it is only a method of paying income tax liability in advance. And the reason for this is to help the taxpayers not to have a large tax debt on assessment. So Each company is required to submit biannual provisional tax returns. Biannual, we mean a company must submit its provisional tax return every 6 months within its financial year. So income tax must be submitted every 12 months, but provisional tax must be submitted every 6 months. And these are the periods for provisional tax. So your year end is 28 February, meaning it started in 1 March 2021. Your first provisional tax will be called 2022-01, and it must be filed by February. And the next one must be filed in August. So when you count from February, you will see it's March, April, May, June, July, August. So from February to August is first period. Then when you count from August, it's going to be August, September, October, November, December, January, February. It's another 6 months, right? So every year in February and in August, SARS will expect a company to submit a tax return, a provisional tax return. So understand that when we are filing for 12 months, in February, SARS will say you are not compliant. Then we file. Then in August, they will say you are not compliant. So for this one, it will always happen twice in a year. Okay, and then how, okay, it's on this. When should it be paid and how should it be paid? So we have discussed that February is the first 6 months. You must file for the previous 6 months. Then August is the second 6 months. You must file for the previous 6 months. The first provisional tax payment must be made within the 6 months of the start of the year of assessment. Now, for the years of assessment starting in March, this will be in August, as I've already explained. And then the second must be made by no later than the last working day of the year of assessment, being the last day of February. If February is your year end, and how should it be paid? As explained on the available services on e-filing, this can be paid by you registering on e-filing. Then you can make it in the comfort of your office or the comfort of your own home. And please do not forget, as we are progressing along, ask your questions on the comment section so that my team can sort them. As we take that 5 minutes break, they will be quick to provide me with those questions, then I can quickly answer them. So do not wait until we get to the end, only then you start typing. So as we progress, make sure that you type in your question with your email on the comments section, anything which is within the scope of what we are discussing today. The second tax type to discuss is your payee, or pay as you earn. What is it? If you have employees working in your company, the tax that is required to be deducted by an employer from an employee's remuneration is called payee. Now, as your employees are earning, we say they must pay tax. That's why we call it pay as you earn. Now, you as an employer, it's a legal obligation to withhold the money for taxes from your employees, then pay it over to SARS. An employer who's registered or required to register for SARS for payee or for SDL purposes is also required to register with SARS for payment of UIF. So if you have employees who are who have to pay payee, you are obliged to also register with SARS for UIF. And who is payee for? You are liable to pay income tax if you earn more than those following earnings. If you are less than 65 years of age and your annual earnings, meaning your earnings in 12 months, are 91,250 or more, you are supposed to pay tax. This makes your monthly earnings 7,604 rands. If you have an employee who earns per month more than 7,604 rands as their basic salary, you as a company, you are obligated, you are obliged to register for payee. If you have an employee or employees who are between the ages of 65, but not more than the age of 75, and you are paying this person 11,771 rands per month, you as an employer, you are obliged to register for payee and deduct taxes from this employee. If you have an employee who is 75 years of age or above, okay, in 10 minutes, it's going to time out again. So we will resume by just clicking on the link. You have an employee who is 75 years or older, and you pay this person 13,158 rands per month or more. You as an employer, you are obligated to register for payee. And if you have any of the following people, it means you are also required to what? To register for UIF, contributions which you are going to make through SARS. Then SARS redirect them to the Department of Labor. When should it be paid and how should it be paid? A company must submit its EMP 201 employees tax returns monthly. And it must be paid within 7 days after the end of the month during which the amount was deducted. What does this mean? If you have registered for payee, it means every month you need to declare. Every month. But when must you declare? You need to declare within 7 days after the end of the month for which the amount was deducted. Let us take an example. Let's say June 2022 month. You are supposed to file with SARS by the 7th of July 2022. And for the month of July, the payroll that you are going to make, by the 7th of August, you're supposed to file for payee with SARS. The failure to do so, it makes you non-compliant. And how can you make a payment? You can pay on e-filing or EFT, or make payments at the bank, which have been listed there. Then manual forms of payments will no longer be accepted. So you can no longer, for example, write the check. If you do this, it will be returned to you. Now, an employer who ceases to be an employer in relation to an employee, for example, when the employee dies or when they retire or when they resign, is required to deliver employee's tax certificate within 14 days. This is 2 weeks on the date on which employment ceased to the former employee. There was just a general advice. The third type of tax is not really a tax, but it's an insurance, UIF. What is the UIF? We all know what insurance is. Insurance is a protection against a loss. Now, unemployment insurance fund is an insurance that protects employees against the loss of employment. It gives them a relief when they become unemployed or when they are unable to work because of maternity, adoption, or parental leave, or because they are ill. Not only does it ensure the contributor, but it also provides relief to the dependents of a deceased contributor. Meaning if your employee has been working and they have been contributing to UIF, if they pass away, their dependents are able to claim UIF. That means they are able to claim the insurance that their guardian or their provider has been contributing. Now, who is it for? All employees as well as their employers are responsible for the contributions of UIF. It is only 1% of your gross remuneration. Now, it is not applicable if someone is employed and is working less than 24 hours in a month. Now, I believe that we realize the importance of registering our employees for UIF, because if we don't, it means we are having our people to work without having to insure them. And when they pass away or when their term of employment comes to an end, they face difficulties. But by taking a percentage of their income and contributing it to the Department of Labor every month, you are thereby helping them to have income at the time when they are unemployed or they are not able to work. And how much do you need to pay? When should it be paid and how should it be paid? The amount of the contribution we have discussed in the previous slide must be 1% of the remuneration paid by the employer, meaning if you have that employee who earns 5,000, you need to take 50 rands from that employer, that is 1% of 5,000, then pay it over for that person's insurance against the loss of employment. A contribution shall not apply to so much of the remuneration paid or payable by an employer to an employee as exceeds from 1 June 2021, 17,712. What does that mean? It means if someone earns 18,000, we are not going to take 1% of 18,000, but we are going to stop at the maximum of 17,000. So if someone earns more than 17,712 per month, the maximum they can pay is 1% of 17,000. So if you see yourself paying someone 25,000 and then you take 1% of 25,000, then that is wrong. You must stop at 17,000, right? How and when should it be paid? A company must submit its UI-19 form return monthly. So this works hand in hand with payee. At the end of every month, you need to file for this, and it must be paid 7 days after the month during which the amount was deducted. The example which I demonstrated when we were discussing payee. The only difference is that you will file this through SARS, but you have to complete a form that is called UI-19 separately, and you send this to the Department of Labor. And the reason for this is that at SARS, you are declaring the total amount contributed for all your employees. But the UI-19, it breaks down the amount for each individual employee. Now, what are the offenses that one can incur with regards to the UIF? It is an offense if someone fails, number one, to submit a return or a document to SARS. meaning failure to submit any of these returns, it's an offense. Or if you fail to issue a document to a person as needed, meaning, like we have said, you have an employee, then the employee ceases to be your employee. Within 14 days or 2 weeks, you are legally obligated to issue this person with a tax certificate, as discussed in the previous slide. Failure to do this is an offense. Now, it's an offense also if you fail or if you neglect to deduct or withhold or pay SARS contributions to the UIF. If you have an employee who meets those requirements or the minimum tax thresholds we have discussed, and you do not deduct from them the necessary amounts, it is an offense. If you fail to produce or to make available information or document required by SARS, it is also an offense. You fail to register or to let SARS know of your change registered details, it is an offense. Or you fail to keep the records as needed, it is an offense. Okay. VAT. So we are moving to the